this video, I'll show you guys how I would invest my first $1,000 into the stock market in today's economy. Do you have less than $1,000 or more just sitting around in your bank account and want to make money with it? If you answer yes, this video is for you. I'm sorry to break it to you, but if you have money in a bank account, it's actually losing money.
Let me break this down. It's losing value due to inflation. In fact, the average interest rate in the savings account in the US is 0.37%. And guess what? Average inflation rate in the US is 3.8% per year. So having money sitting around not being used is actually losing you money. Having your money in a bank account is actually hurting you in the long term. But don't get it twisted. I do believe and suggest that everyone must have enough money in the bank account for bills and daily expenses, and lastly for emergency purposes. But stacking your money in the savings account will actually harm and hurt you financially in the long run. I don't know if you're aware, but mortgage rates continue to rise. Banks continue to collapse. And inflation is once again on the rise. The 0.37% interest rate the average bank account is offering you will never compete with inflation. If you don't invest your money, it will come back and haunt you later in life. And one of the best ways to compete and come out on top with inflation is by investing into the stock market.
So in this video, I'll be showing you guys how I would invest my first $1,000 into the stock market. But before we do, please hit the like button and subscribe to my channel for more financial literacy. Look, I believe having a well-balanced stock portfolio is crucial for overcoming the market's volatility. So in this video, I'll be splitting my stock picks into 3 categories.
These 3 categories are growth stocks, essential stocks, and lastly, ETFs. Diversifying your portfolio will not only prevent you from any bad losses, but it will also help your portfolio with stability during difficult times. With that being said, let's begin with the first category.
I hope that by breaking down our stock choices, you will have a much better understanding of how stocks should work. The less stocks you hold in your portfolio, the riskier it only gets. Because let's say you only hold 1 stock in your portfolio, and overnight, that 1 stock you hold has some really bad news. That 1 stock will drop drastically. And to prevent this from happening, I like to diversify my stock portfolio with many stocks.
So the first category will be growth stocks. Growth stocks do come with a bit more risk, but the rewards are higher. Sometimes you have to risk it to get the biscuit. LOL. Anyways, growth stocks are usually stocks in the technology sector with huge potential for capital gains. These stocks are usually more volatile and much more exciting. The second category is essential stocks. In this category, I will be picking stocks that are essential. These stocks are way more stable and reliable compared to growth stocks. Essential companies may not be exciting compared to others, but they will offer you stability and diversify your portfolio. And the last category will be mutual funds ETFs. A ETF stock is basically a basket of stocks, and in that basket they hold a variety of different companies. And the best part about an ETF is that they are managed by professionals and are completely hands-free. So you can sit back while someone else is working for you.
So for my growth stocks, I'll be holding 3 massive companies that are dominating in their own industries.
First, I would put $100 in each one of these stocks I'm about to mention. The first stock will be Tesla stock. Tesla has huge potential. As the world is going greener, I don't see this company slowing down. Next, I will spend my following $100 into Apple stock. Apple has had a huge influence for technology and humanity, and I don't see this company going anywhere else besides up. It almost seems like everyone is chasing after the new iPhone or their latest products. So I do believe this company will continue to grow, and this company is showing no signs at all of slowing down. And for my last growth stock, it would have to be Amazon stock. Amazon is on the forefront of the online shopping retail industry, and boy do I like next day delivery. All of these companies have a bright and promising future, with ambitious leaders running their companies. It's nearly impossible to ignore these 3 giants.
And after spending $300 in growth stocks, this will leave us with a budget of $700 left to spend.
Next, I would be looking into essential stocks. In fact, I would spend $66 into Johnson & Johnson. This stock is in the healthcare niche and is essential to humanity. So for my next stock, I will put another $66 into Reality Income Corporation. This stock uses its shareholders' money to invest into real estate across the world. So imagine having professionals investing in real estate for you. Seems like a no-brainer to me. People will continue to rent and buy properties, and by investing into Reality Income Corporation stock, you will get to benefit from it. This stock is also perfect for individuals who want to get into real estate but simply live a busy life with no time, or you may not have a significant amount of capital to get involved in buying properties. And for all of these reasons, Reality Income Corporation is another of my favorite stock holding in my stock portfolio. This stock also pays a 4.96% dividend yield, which is also nice. So for my last stock on my essential category list, I will be choosing Waste Management. I would put another $66 into this company. Waste Management is another essential company to humanity. People will continue to generate waste, and Waste Management is there to help.
Waste Management is another boring stock of mine that I currently hold in my portfolio, but it's one of my favorite stocks as well. And the reason behind that is this stock is showing growth year after year. This stock may seem boring for some people, but I believe in this company's future and I have high hopes for the future.
This stock also pays a yearly dividend of 1.70%, which is just the cherry on top. Not only will you help the world, you will also benefit from it. All of these three stocks in this category will actually pay you a nice dividend. So by investing into these three companies that I just mentioned, you will not only benefit from the capital gains, but you will also be rewarded with a little dividend payment that the company is willing to pay you just for holding their stock. Anyways,
this will leave us with roughly around $500 left to spend. But I did say I also be adding ETFs to my stock portfolio, so let's get on to that.
I will be picking 2 ETFs, which will be the core of my stock portfolio. So I will be putting the rest of my money into 2 great stocks. I would spend $250 on the S&P 500 index fund. The S&P 500 has a track record of delivering 11.88% in the last 40 years, which is insane. The S&P 500 holds the top 500 companies in the US. So adding this stock to your stock portfolio will be like adding a small amount of the top 500 companies into your portfolio.
If I have to choose one company for the rest of my life, it will most likely be the S&P 500 index fund. This stock has proven time over time to overcome hard economic times and come out on top. With a track record of delivering you 11% per year, it will be hard to ignore it. This stock didn't do too good recently, as it is down 6% from the past year, which is good news because I get to buy at a discount.
So with this out the way, let's get into the final stock that I would add. For my last $250, I would actually put the rest into another ETF named SCHD Dividend ETF. This stock is similar to the S&P 500, but they only hold stocks that pay out dividends. With dividend stocks, you get to enjoy the capital appreciation of the stock, and the company will actually pay you a small dividend yield just for holding their stock. So it's a win-win in my opinion.
Investing into ETF stocks is a very smart approach when getting started. In fact, I currently hold both of these ETFs not to mention, and my overall experience with them are fantastic overall. ETFs is a must-have in my opinion. They offer you stable growth and stability.
With that being said, don't get discouraged whenever a quality stock is down. I personally buy more if I truly believe in the company. This lets me buy at a discount and adding more shares of a company to my portfolio. I don't mind adding more of a quality stock to my stock portfolio at a great discount.
One of the most successful investors in our lifetime, that goes by the name as Warren Buffett, once said the following: be fearful when others are greedy, and be greedy when others are fearful. This basically means to be cautious once your stocks and the economy are high, and to buy more when stocks are low and people are panicking.
Think of this in the real world. Whenever your favorite items are on sale, people tend to get excited. Same thing happens to me with stocks. But you should only buy dips on quality companies with a bright future. Don't invest into a company who's going bankrupt or in the wrong direction.
And please, don't invest into a company just because someone on TikTok told you to do so. You still need to do your own research and due diligence before making any investment decisions. Adding all of these stocks to your stock portfolio will balance your portfolio and protect you from market volatility and protect you from hard times. Look, I'm my financial advisor. This is simply how I would be spending my first $1,000 into the stock market in today's economy. But please, make sure you do your own research before investing into any company and any stock. With that being said, let me know in the comments below your thoughts on my stock picks. And if you want to see a crypto version of this video, just let me know in the comments below. I might even do that. I hope you learned something new today. But one last thing, don't forget to like and subscribe for more financial leaders. And if you're interested in learning more about dividend stocks, click on this video here. Or you may even like this one instead. Thanks for watching. This has been your boy Kendrick, and I'm out.